Okay. I know, Chris, you had just mentioned that you were, I don't know the right term, sweating the exam a little, and uh, it's unfortunate the way they've structured the class that it's so exam heavy. It makes everybody worry about every exam. And then Proctorio on top of that, which makes everybody like feel like, I don't know, like just the pressure of like the camera staring at them as they take the exam. Um, I did want to put out there that you should know on my end what Proctorio is like. It's like not nearly as rigid as it probably seems. The worst thing that could happen if Proctorio saw you cheating, or even doing something that it could think was cheating, like maybe it sees you looking away too much, or getting up and going out of the room and coming back in, or wearing headphones. The very worst thing it will do is it will send a little report to the instructor that says, "Hey, your student was wearing headphones at this time," and it'll have a little link so that the instructor can go on there and look at the video. So like the next phase would be like the teacher emailing you, being like, "Hey, I noticed you were wearing headphones during the exam. You're not allowed to wear headphones during the exam," and like that's it. Now, if it was something more serious where it looked like you were cheating, um, or let's say you'd already been asked not to wear headphones, and then the next time you did it again. But even then, it's not that the computer system, it's not like it's going to boot you out of the exam and like shut the exam down on you. It's just going to send a report. And then it's up to the instructor to deal with that. And most instructors will just reach out to the student and, so I hope that alone dispels some of the stress that people feel when they on proctoral. My daughter is going to BYUI right now. I was talking to her last night and she was like, I hate proctorio. So you're not alone. My little girl hates it too. Um, but it's not going away, and it's not even something as an instructor like I have a choice in. And if it wasn't that, it would be some other thing. At the college I work at, we have a different company, but they still have proctoring software. So it's just a thing. Um, so that's first. Uh, Second thing I just wanted to throw out there is um, just I want to make sure everybody's aware that there are exam study guides because there's always like this time in the semester I find someone who's like, I didn't know that that was there, even though I mentioned it the very first of the semester. Um, um, so you guys probably all know, but I'm going to just show you real quick how to find it in case someone you didn't, or in case someone who watches the recording later doesn't. So let me share my screen with you. And again, if you guys already know where this is, then it's kind of dumb. I'm not trying to waste your time, but um, let's see. All right. So from the home page, you can actually access it a couple of ways. It's in the modules. I think it's a little bit, I don't know, buried, and that's why I've added it in another place. But like when we go down to the exam itself, so here we go. Where are we at? Okay. Sorry, guys. Here we go. So so there's me clicking on the exam. Let's see. Actually, I think okay, so the course developers removed it from there, which was probably good because it was a weird thing to get to the instructions and then find the exam guide for that the first time. Um, so let me just show you where I've put it to make it easier for people to find. Up here in Brother Fox's, okay. This is one of the things I hate about Canvas. You go to click and then it like jumps because it wasn't settled yet. Up here in Brother Fox's helpful stuff, under additional study content, you'll see my magical, you can tell my web development skills. I just made a Google Doc. Um, and then you go down to wherever we are. In this case, we're getting into exam 3. Click on exam review. It actually doesn't matter which one you click on because it's all the same PDF. and then, it's broken down by exams. And I'm telling you, whoever wrote this thing was looking at the exam as they did it. So they were like looking at exam questions and then writing out this, understand the difference between multi-step, and then trying really hard not to give up too much, of course. And the other thing I don't love about this is these pumpkins confuse everybody. I think the person who wrote it thought it would be cool to have some sort of a visual, and maybe it was fall when they did it or something for inventory. So there's pumpkins. Don't worry about them. What you really need to know about inventory, in this case, is the FOB destination stuff is there too. Anyway, so I just want to make sure everybody knows where that is because I think it's a valuable resource. And I know that students who say they use it and they kind of go through it and don't just read through it, but actually go through it and ensure that they know how to do each part of it, they tend to do better on the exams. That being said, I do know that we're all humans and we have a finite amount of time and energy that we can invest into any given endeavor that we're involved in. So I just want to make sure you have the tools. So any other thoughts? Thoughts might be dangerous or questions about the upcoming exam. I know people are worried about it.
I have a question.
Yeah.
I was taking the practice exam
Mm-hmm.
and I took a picture of it. There's a question. It's like one of those shipping like
Uh-huh.
N-30.
Uh-huh.
So hang on, I'm gonna find the picture. Give me just
Okay.
1 second. Just my okay. So it says a company purchased $2,000 of merchandise on August 15th with terms of 1/10 N/30.
Uh-huh.
On August 17th, it returned $200 of merchandise. On the 18th, it paid the amount due. And I was just confused because when I did the math, it came out to $1,800, but the correct answer is 1,782. So I'm not
Right.
sure where I went wrong on that.
Sure. So what they have going on there is the 110/N30 means a 1% discount if it's paid within 10 days, or the N30 means the net or whole amount is due within 30 days. So if they paid within 10 days, when was the purchase made?
The purchase was made the 15th,
Okay. And then the payment was made on the
18th.
okay, so they paid 3 days later within that 10-day window. So in essence, we would say that they owed 2,000, but then they returned 200 worth. So now they owe 1,800, but they owe 1,800 minus 1% of that. And so for me, the easiest way to calculate that is to say 1,800 times 0.99, because
Mhm.
that's 99% of 1,800, which is the same as 100% minus 1%.
I
But
think I got wrong. I think I got I did the wrong percent, is what I think happened for me. I think that's what it was. Okay.
yeah,
Thank you.
okay, no problem. Yeah, was it 1782? Is that what the right answer
Yeah.
was? Okay, that's
Yeah.
what I got too.
1780. I got the wrong. I did the wrong percent.
I wonder if it was a good year. I don't know. I wasn't around. Okay. Um, okay, so I know that Gabriel had some questions. He just wanted to go over first in, first out, last in, first out again. But I know that was stuff we did last week to an extent, so I don't want to make everybody stay for that. So I was going to wait until we were good on other questions. And sorry if you can hear my dogs. Every time an ambulance goes by, they just howl. They join in the wild rumpus. Um, so before Gabriel and I take a look at first in, first out, last in, first out, is there other things that you would like me to discuss or cover?
I have trouble with the journaling. I haven't figured out a good pattern to it to help learn it other than brute memorization. Is there something I'm missing, or is it just brute memorization?
So I'm not sure it's specifically, just doing journal entries in general, or journaling certain specific types of things.
The periodic system. I know that some of it terms have changed, like revenue is now sales, things like that. But other than that, I'm really messed up.
Okay. Is there a specific problem that we could look at that we could walk through together that might help everybody? Because it might actually answer some of Gabriel's same questions too. It sounds like it's similar. So if we look at one of yours and one of his, we may get some benefit out of it.
On the practice exam, the next to last one gave me fits.
Okay.
I didn't record it though.
Okay, and let me pull it up on my end here, and then we can take a look together. Hopefully I can get to the same one. One of the things I hate about the exams or the exams is they have it set to shuffle the questions. So then when someone asks me a question, I go to find it. I have to look through all 50 questions to find their question by the text rather than by the number. It's silly, but hey, the world can be silly sometimes. So let's see. Give me a moment to pull this up. Maybe that should be like the theme of something. The world's just silly. Sounds like a Monty Python skit, actually. Let's see. Stop that. It's far too silly like that. Practice exam numero 3. Come on, computer. Sorry, it's taking a moment. It's taking a lot of moments.
Waited this long, a few more won't hurt.
I sometimes wonder how serious a sin impatience is, because I've made some pretty big mistakes through being impatient. And if the ultimate goal is that someday I'll have all that the Father hath, I think it's something I'm going to have to learn to control. And so an impatient God would be pretty, like, we have a God who has made plans thousands of years in advance, and you better be patient if you're going to do that. Let's see. Okay, I think it's starting to load now. So I won't find out today if I was going to be struck down for my impatience. Let's see. So I'm going to look at, preview this. And then you said the second to the last one.
Yes.
Let's hope it's the same. Okay, so let me share my screen and see if we can walk through this and see if it's helpful. All right. So here I've got, does this look like the one? Let's see.
Yes, that's the one.
Okay, that's the one. You have to say it like that. That is that dastardly
That's the
problem.
one.
Yeah. So this is EcoMart merchandising. And we're supposed to use this information above to prepare journal entries. So let's just kind of talk through it. Right now, I've got the correct answers up, which is kind of cheating, but it's okay. And I think it's algorithmic, so it wouldn't be the same as, and it's a practice one anyway, so it doesn't matter even if they are the right ones. All right. So it tells us on October 1st, they sold merchandise for $3,500 with credit terms net 30, invoice dated October 1st. The cost of the merchandise was $1,900. So the first, if it's a trick, I don't know if it's a trick, but the first thing for me is to remember anytime I'm the seller of goods, I have to make 2 entries upon selling, because I have an entry that records my cost and the reduction of my inventory at cost, and then another entry that records the retail transaction. So my sales and the amount that the customer owes me at the retail price or the marked up price. So that helps a lot for me. It's like, okay, I know anytime I make a sale, I've got to do 2 full entries. And so that's a first step. I don't know if it's a tip or a trick, but that's one that helps me. So
But that's just for the seller, right? Because the buyer
Right.
doesn't have costs.
Right. So that's the other thing that can be challenging about these type of problems is you have to like first identify like who am I in this transaction, right? Am I the buyer or am I the seller? And so, so we're the seller because it says we sold merchandise. But a lot of retailers, they buy merchandise from suppliers, from wholesalers, and then they sell it to customers. So it can be confusing. In real life, it's actually way easier because you know exactly who you are in each transaction. You're you. And you know if you bought something or sold something. Whereas in a word problem, you have to look for these little cues. Anyway, so the first transaction we record here is the retail transaction, meaning at the price we sell to the customer. And it will always look this way. There'll be a debit to accounts receivable if the customer didn't pay us cash at the time of sale, or if they did, it will be cash. And then there'll always be a credit to our revenue account. And typically for these type of merchandising problems, it's always sales. But you'll see, I mean, if you were to go start working for a company, they might have like sales of merchandise, or I mean, but it's something roughly like this always. So the retail transaction always looks that way, a debit to the assets of either cash or accounts receivable, and a credit to the sales revenue account. And that's for the full price, meaning what we sell it to the customer for. And then the second entry is always the same as well, always follows the same pattern, which is a debit to the expense, or cost of goods sold is the expense related to the things that we're selling, and a credit to our asset merchandise inventory. Because our inventory is going down. Why? Well, because we're giving it to the customer now. So that, I don't know if that helps, but recognizing that's always a pattern really helps.
Okay, so in the sale, the debit is to the asset, and in the expense, it's a credit to the asset.
Right. Yeah. Because think about what we're doing if we sell something to somebody. What I'm doing is I'm trading you an asset, my inventory, for an asset, your cash. And I'm getting more cash than what my cost of inventory was if I'm doing it right? If I'm running a business correctly, then there's a markup. So that's why we have these 2 transactions. And so you can see my revenue went up by 3,500 and my expense only went up by 1,900. The difference would be the gross profit I made on that transaction. And so in order to record sales revenue, I show that I'm receiving an asset, in this case, accounts receivable, equal to the amount of my sales, and then I'm losing an asset, 1,900 in merchandise, equal to the amount of my cost of those goods. And so then the 4 of those work together to record the sale, so I can see revenue went up, expense went up, and then the asset, accounts receivable, went up by the amount of revenue, and the inventory went down by the amount of the expense of it. Does that help, like, clarify what's happening in a sales transaction more, or not? Or does it make it more confusing?
I think it's getting clearer.
Okay. And then you take someone like Walmart and think of the scale that they're doing this on. It's
No,
mind-boggling.
thank you. Okay, so how would this be different if it were the periodic system?
So let's see. If it were the periodic system, we would just be tracking accounts receivable and sales, and we wouldn't be tracking inventory and cost of goods sold. With the periodic system, we just wait till the end of the year, and then we calculate our cost of goods sold by counting up our inventory,
Okay.
knowing what it was at the beginning of the year, adding any purchases we made during the year, and subtracting what it is at the end of the year. So with a periodic system, we're keeping track of that inventory as we go.
Okay. So in the periodic system, then you have to do something with the sales returns and allowances. If somebody
Yes.
returns stuff.
So, well, again, it depends. Am I taking those returns and putting them back on the shelf? Or am I taking those returns and, throwing them away? Because that would change. But in a periodic system, we still have to record those sales returns and allowances, and then decide whether we're adding them back into inventory or not.
So if it gets back into inventory, then it would raise your inventory. So it would debit your inventory.
Mm-hmm.
And
Because
if,
sometimes people return stuff that's still good, so you just
right,
on the shelf, right? Yeah.
but if it's not, then what happens with it?
Well, then we have to,
Internally,
yeah, we'll write it off. So we'll
could
say,
be a cost of goods or what?
yeah, it'll end up being a cost of goods sold expense.
Okay, so you'd have a sales returns and allowances and cost of goods sold in the same entry?
So let's see, if a customer returned it back, you're asking me periodic when my brain's in perpetual. Give me a moment. See if I could shift gears. What's crazy is that this course focuses on periodic, but almost everybody in the world uses perpetual now. So like the course I teach at another college, it focuses on perpetual and just says, oh, by the way, this is what periodic is. Where I feel like here they kind of say, here's periodic. Oh, by the way, here's what perpetual is. Anyway, so if I get a return in the periodic system, what I'm going to do, and it's something that is not keepable, what we're going to do is we're going to debit. So again, remember that with a periodic system, we're not even keeping track of cost of goods sold and merchandise inventory, right? We just would have made this entry. So all I would do then is reverse this, and the customer would now no longer owe us for whatever they returned. And sometimes instead of reversing sales, they'll do like a returns account or a returns allowance account or something like that just so they can add that up at the end of the year. But we don't really track our inventory as we go or our cost of goods sold in periodic. So if we have to throw something away, we do. And at the end of the year, when we count it all up and add and subtract the difference, it will still factor into our cost of goods sold.
Okay, so if something is returned in a periodic system, you don't track it until the end of the period,
Correct.
no matter if you throw it away or not, or return it to inventory.
Right, because in a periodic system, we don't record changes to inventory as we go.
Only at the end. Okay.
Mostly because
All right.
if anything bigger than a tiny little store, it would become very complicated to try to keep track of that if you didn't have a barcoding system or something that would allow a perpetual record.
Okay, I think that helps. Thank you.
You want to look at the others or
Sure.
do we? Okay. So let's just look at the others real quick, and hopefully they're helpful to more than, to a broader group here. So the customer on October 1st sale returns $350 of merchandise for full credit. The merchandise had cost $190. So again, you'll see on a return, we also do two entries. The first entry, again, is at that retail price or the customer's price. We're going to debit sales returns and allowances and credit accounts receivable. So what we're saying is the customer no longer owes us $350. And we're going to debit sales returns and allowances because we don't want to reverse the sales. We want to keep track of the amount that are returned. Okay, so we use this special sales returns and allowances account. You'll see on like a multi-step income statement, that it will have like sales or gross sales minus sales returns and allowances is net sales in essence. And so this is just a way of keeping track of how much returns we have. And the second part of that entry is looks like we're adding it back into our inventory. We're debiting inventory and we're taking it out of our cost of goods sold by crediting cost of goods sold. So really this is kind of a reversal of $350 worth of sales. The only thing different is instead of crediting it right directly to sales, we're going to credit it to sales returns and allowances so we can keep track of those returns.
Okay, so whether inventory is coming or going, whether it's going in or out, there's going to be cost of goods sold and adjusting merchandise inventory in the periodic system.
Yeah.
Okay.
That's kind of like by definition what makes it the periodic system, the fact that we're tracking the changes to inventory and cost of goods sold on the fly with each transaction rather than just by calculating the change in the amount of goods we have at the end of the year.
Okay.
Let's see. On the 9th, we sold merchandise for $1,700 cash, and the cost of the merchandise is $1,250. So we can see that here, instead of accounts receivable, our cash goes up, but still, it's the same entry except cash instead of accounts receivable, and the sales revenue account gets credited or goes up by $1,700, and then we debit cost of goods sold and credit merchandise inventory. So this October 9th transaction is essentially identical to the October 1st one, with the exception of the customer paid in cash instead of promising to pay us later. And the amounts were different. And then finally on October 30th, we received payment for the amount due from the October 1st sale, less the return. So we're going to say, all right, so originally they owed me $3,500. So what I always keep track of is my accounts receivable. I debited accounts receivable $3,500 here. Then I credited accounts receivable $350. That means my balance of my accounts receivable would be $3,150 at this point, $3,500 minus the $350. And then the second question is there a discount? So I go look at the terms. This guy's terms were net 30, meaning no discount, just the full amount due within 30 days. So that's the amount he'll have to pay me, $3,150. So being paid looks like this. My cash goes up and my accounts receivable goes down. So I debit cash and credit accounts receivable.
Okay, that was very helpful. Thank you.
I'm glad it was helpful. All right, Gabriel, you want to take a look at yours? You're muted.
You're muted.
Yeah, could we look at the problem 3 of the week 9 quiz access?
Quiz access or quiz? Quiz access?
Yeah.
All right. Give me a moment here. Yeah, I always feel like, it's valuable to like try to explain something, but a lot of times, like walking through something together is like way more effective.
Yeah.
When everybody's kind of looking at the same stuff. So let's see, week 9 quiz access. You said number 3?
Yeah.
All right.
And I guess like part 4, like since they're connected.
Let's see. Let me share my screen. All right. So this is the one you're talking about?
Yeah.
You get my thing centered a little better. There we go. Okay, so you felt like, so this one is the periodic system. And you said, wait, what part?
Specifically like, well, I guess finding the, or I guess identifying the ending inventory and cost of goods sold part.
Okay. Yeah, so let's look at first in, first out first, and we can step through this, okay? Because I know for some people, even though like the math's not hard, they kind of look at this layout and it just like breaks their brain because it's like all of this information thrown up on you in one place. Um, Sorry if the term thrown up on you is too extreme, but I think it's accurate. Um, it's like a bit overwhelming at times. So we're given this information up top, and it tells us this Hemming company had these purchases and these sales and so forth. And then it says determine the costs assigned to ending inventory and the cost of goods sold using first in, first out, last in, first out, and so forth. All right, so we go through this process. We know that our beginning inventory, I'm just going to try to go through this part quickly. Our beginning inventory was 235 units at a cost of $11.40 for a total cost of $26.79. So there we have right there. And then we know that we know our purchases. Those are listed out for us. So 360 units at $16.40, 435 at $21.40, 135 at $26.40. So we can multiply each of those out to get our totals and then add them all up. And that gives us our cost of goods available for sale. And that is like, its name is really descriptive. It means all the stuff that you had available to sell, which was the stuff you had at the beginning, plus any stuff you purchased during the year, is your stuff that's available to sell. So we had, in this case, 1,165 units at a total cost of $21,456. So now to figure out our cost of goods sold, we're going to go look at this information, and somewhere it's going to tell us how much our inventory was at the end of the year. Where's that at? Oh, it gives us these sales, okay? So we can see that we sold 170 units, 290 units, 410 units, and this is the retail price, or the price we sold them to the customer for. So we sold a total of 870 units, okay? So the question now, when we get into this first in, first out, is like, well, which units did we sell and which units are still present at the end of the year? So with first in, first out, we would assume we sold the oldest units first. So if we sold 870, we would assume we sold all 235 of the beginning inventory, plus all 360 of the purchases made March 14th, and then some portion of the purchases made on July 30th, enough to add up to 870 total sold. And that's 275. I would find that just by going 870 total minus 235 minus 360 tells me how many I sold of the July 30 units. Does that follow so far, Gabriel? Or no?
Yeah, kind of. Here. Yeah, so just to reiterate what you were saying, to find just the ending inventory using FIFO, you would subtract the the inventory that you sold in the beginning, like from the beginning inventory, March 14th, from the total amount of units sold. That gives you your October 26th. Wait, I'm
So
sorry.
yeah, no, that's okay. Let me restate because I was going pretty fast. So we know we sold a total of 870 units. And so with first in, first out, our assumption is we sold the 870 oldest units we had, or the first units we gained that came into our ownership. So that means if it's 870 total, we know we sold all 235 of these units that were in beginning inventory, plus all 360 of the units that we had purchased on March 14th, plus some number of them that were purchased on July 30th. To figure
Okay.
out how many
And
of the, what's that?
oh, sorry. Keep explain.
So to figure out how many of those July 30th we sold, I'm going to take that total of 870 minus all 235 that I had in beginning inventory, minus the 360 from March 14th, and then that gives me 275 of these July 30th units. Then I just multiply those by their cost, the number of units times their cost, and then add them up, and that gives me my cost of goods sold. Does that make sense?
Yeah.
Okay. And then my remaining inventory, I have to figure out, okay, if I had 435 units that I bought on July 30th, and I sold 275 of them, 435 minus 275 means I have 160 still of those units left sitting in my ending inventory. Plus, I have all 135 of the units that I purchased on October 26th in my ending inventory. Again, I can multiply those by their costs, and that will give me 295 units with a total cost of $6,988 in ending inventory. So then when we do last in, first out, we're just making the opposite assumption. We're making the assumption that the newest units I purchased, the most recently purchased, are the ones that I'm selling. Again, we have to do this in real life because unless we put like a numbered sticker on every unit, we just don't know which ones we sold. I don't know if I sold the ones I bought in March or the ones I bought in October. And so we're just trying to do this to find an estimate of our cost of goods sold and the value of our ending inventory. So again, we know we sold 870 units. So if we're going to make the assumption that we sold the newest units, we're going to assume that we sold all 135 of the October 26 purchased units, plus all 435 of the July 30th purchased units, plus some number of the March units. And again, to figure out how many, I would take 870, which is the total number sold, minus 135, minus 435, and that would tell me that I sold also 300 of the March 14th units. Multiply those by their cost. That gives me my cost of goods sold. And then which units are left in inventory? Well, if I had 360 March 40 units and I sold 300 of them, I still have 60 left in inventory. And I have all 235 of that beginning inventory. And multiply those by their cost, and that gives me the cost of my ending inventory. So you can see with these two different methods that we come up with a pretty different number for our cost of goods sold and our ending inventory. But either assumption is legal from a revenue sort of perspective. Like if the government was coming to check that you were reporting your revenue correctly and your cost of goods sold correctly, either way is a legal way of doing it. You just have to be consistent in how you do it. So that last part of figuring out our gross profit, we just go up here. We know how many units we sold, and it looks like we sold them all for the same price. So I would take 870 units times $41.40. That would be the sales revenue. And you can see it's the same under both methods. And then take my cost of goods sold under each method. Sales minus cost of goods sold gives me my gross profit. Was that helpful at all?
Yeah, that was helpful. Just now I understand like how to calculate the number of units sold using
Okay,
both methods.
awesome. I'm glad it was helpful.
Thank you.
Okay. Well, wow, it's 5:42 already. Oh, sorry, 6:42 up there. Daylight savings just happened, and I'm in Arizona, and Arizona is like, we refuse. People in Arizona are actually proud of the fact that we don't do daylight savings. Like they feel like it's being rebellious or something. I don't know. Like if that's the extent of your rebellion, I guess that's okay. Other questions, or either about a specific problem or just a more in general question I can help with? Or are we all tired of being here? dinner time. Okay. It's one of those speak now or forever hold your peace sort of moments, right? Like, but we're not getting married. We're just ending a meeting. So that's better. Okay.
Wait,
Like,
sorry.
oh, too late, bro. No, I'm just kidding. Go ahead.
Hold on. There's one more question I wanted to go over. This one's from the quiz from last week. Here. Okay, I think it was.
You said last
Okay,
week,
number 9. Yeah,
the
number.
chapter 5 quiz.
Yeah.
Everybody hates this one, Gabriel. No one likes it. I don't even like it because I get talked in circles trying to explain it. So let's take a look at it though. So this is this company that had an error. And I think the first problem with this problem, the problem's problem, is that it is headed like it throws these terms understated and overstated out there as if everybody's just comfortable with them all the time. And so like for me, the first step is like to define those terms. When we say something is understated, it means that we are showing on our report a number that is less than what it actually should be. So it's less than the correct amount. I know that's kind of obvious, but for my brain, the first time I heard these terms, I was like, oh, that makes sense. And then I tried to do it and my brain like tripped over itself or whatever it did. And when something's overstated, it means what we're showing on the report, on the statement, is more than what it really should be. Okay. So that's the first thing to like kind of like line out these problems. And then so it says our year 1 ending inventory is understated by $59,000, and the year 2 ending inventory is overstated by $29,000. And then it tells us to prepare a table to show the adjustments necessary to correct the reported amounts. So here's where it gets confusing, okay, is if my year-end cost or my year-end, this is a company using a periodic inventory system, okay? So if my end of year inventory is showing $59,000 lower than it actually is, what that means is when I go to calculate my cost of goods sold, because cost of goods sold is beginning inventory plus purchases minus ending inventory gives me cost of goods sold. Okay. So if that ending inventory is showing, what did it say? It was understated. So if my ending inventory is too low, it's going to make it look like I have more cost of goods sold than I actually do. Am I getting that right in my brain? So I'll be overstating my cost of goods sold. Since we're subtracting out ending inventory, it makes the end result, which is cost of goods sold, higher than it actually should be. So,
Yeah.
so I'll be overstating my cost of goods sold. And since cost of goods sold is an expense, which reduces net income, right? If I overstate cost of goods sold, I'll be understating my net income because I'll be showing too much cost of goods sold expense. And so now I have to come in here and be like, okay, so if my cost of goods sold is showing $59,000 too high, then the correction I need to make is a negative 59,000. Reduce it by 59,000. If my net income is showing 59,000 too low, then the correction I have to make is a positive 59,000 or add 59,000 to it. And then my current asset, which is my cost, which is my inventory. If it's too low, then I have to correct it by adding. And then my equity, which is going to be my retained earnings. If my net income is too low, $59,000 too low, that means my retained earnings will be $59,000 too low. So I have to add it to. So I really don't love this question because I feel like they're asking students who are relatively new to this to kind of make some leaps, like to really understand how all those statements are interconnected to each other, which you're like, okay, I think I have that. And then it's like, but since these are an error, then we have to do it all in reverse. And so I really think it's hard for most people. I don't know, is Gabriel the only one who struggled with this problem? I feel like a bunch of people did. Anyway, so if we make those adjustments, right, by reducing cost of goods sold and then adding increasing our net income, our total current assets, and our equity in the first year, then in the second year, they would have been off in the opposite direction. Now, I guess what they're assuming is we don't catch the error until after all of this. So in the second year, if I hadn't made the correction in the first year, then in the second year, think about it, I'd be starting with, if I started with a ending inventory that was understated and use that to calculate, then my beginning inventory in the second year is going to be understated. Okay, because my ending inventory of year 1 becomes my beginning inventory of year 2. And so now I'm starting with a beginning inventory that's too low, adding purchases, subtracting ending inventory, which is got by account, and then coming up with my cost of goods sold. So in that year, my cost of goods sold is going to be too high by the same amount. And so now I've got to make the opposite adjustments, right? I've got to increase cost of goods sold, decrease net income. And at that point, my current assets will be correct at the end of that second year, except now I had a second error where I overstated by 29,000, right? Or understated by 29,000. So I don't know if that was helpful or if it was just more confusing. But that's the concept here is that I think they're trying to make us recognize is that when there's an understatement of ending inventory, that's going to lead to an overstatement of cost of goods sold. And that's related to the formula, how we calculate cost of goods sold. Because we take our beginning inventory, we add our purchases, we subtract our ending inventory. So when ending inventory is too small, it's actually going to make make our cost of goods sold look too big. And then if our cost of goods sold looks too big, that's going to actually make our net income look too small, and so forth. Did it help, or was it just a bunch of words that added to the jumble of confusion? Because I'm pretty good at adding to the jumble of confusion. It's a gift.
No, it definitely helped. And I don't know, I think this might have just been me. But the format of the question, like that empty cell for the adjustment for cost of goods sold, that in the third year, I thought you had to, in my mind, I thought I had to fill out every cell.
Right.
So,
and I think
that's
what they're
funny.
trying to show you is that the way these inventory issues work, because what we're doing is counting our inventory at the end of each year. So they correct by the second year. And then for the year 2 error, it corrects by the third year. So there'll be no additional correction needed in the third year for that, that first error. I think that's what they're trying to show, but I don't feel like they did it in a way that was natural for my brain to grab onto. Because like I said, the first year I taught this, I had to work through this and be like, what are they getting at here? So it's a hard problem for everybody. And I see Chris becoming more annoyed at it as we go through it. So he's like, I want to have a fist fight with that problem. Maybe we should do a class trip and we all drive over to California or wherever, McGraw Hills, tech team is, and we just punched one of their software engineers in the mouth. It would be like, you know, and then we'd be like, oh wait, I'm a good LDS person, I forgive you, and then drive home. Maybe we'll get ice cream too. It'd be great. Something like that. Anyway, well, I hope that was helpful, and if it wasn't, I'm sorry, it's a hard problem. But don't anticipate anything quite exactly like this on the exam, so that's nice. Anyway, we start banding around overstated and understated, and it just gets confusing fast. All right, are we good for today? Is that enough for one sitting? I have like this, my brain lasts about as long as my rear end does in a seat, and then my you know, the longer I'm seated, the more my brain goes addled. So can somebody volunteer for a closing prayer? I guess I could volunteer for a closing prayer. I don't mind doing it. All right. I chose myself as volunteer. But dear Father in heaven, we are grateful for the gospel of Jesus Christ and the opportunity it provides us to repent of our sins, to draw closer unto thee, and to prepare to receive greater light and knowledge and growth at thy hand. Father, we're grateful for BYU Idaho and the internet, and that we have these opportunities to extend learning and education in such a broad way. Father, we know that you've asked us to seek learning, and we seek thy help in this. Please guide us that we may learn the things we need to become more serviceable to thee and to thy kingdom and to our brothers and sisters and to our families. We love thee, and we say this in the name of Jesus Christ. Amen.
Amen.
Thank you, everyone. Have a great night. Good luck on the exam.
Thank you, Brother Fox.
I'll see you.
Yeah. Thank you for your help.
Thank you so much.
Thank you.
Bye-bye.